Good morning to all traders and welcome to this Wednesday's Market Insights video. It is the 12th of February 2020. Today we're going to talk about gold and also oil. They've been moving hand to hand, which is something very rare to see actually, but this happens of course on fears around coronavirus. Fed chair downplayed the coronavirus yesterday in his testimony, the first day, which is going to continue today by the way, and that is the reason that gold actually fell a little bit lower. Now oil, although demand is weakening because of China, we've had the API report yesterday, right? And the API report reported a very big crude oil inventory, and that actually sent oil to the actually not sent. I mean, there were initial gains because fears of coronavirus deteriorating, but then all this was discounted, and all the earlier gains were actually taken off the table. I want to start with the gold though. If you remember, let me just go a little bit further out. It would look a bit confusing here, but just bear with me for a minute. We talked about this being wave 5, right? And then going for an ABC. I was looking this C wave to go down to create a double bottom, right? Down here, a double 4, let's just call it, which is often a case seen. With that being said, now we've done wave B, right? And here is where I'm going to go lower a little bit. We've done wave B. It looks like at least completed, right? So we've had the first move to the downside with a 5, 1, 2, 3, 4, 5. That was wave A. Then we had a W, X and Y, double zigzag over here with a nice triangle pattern. And then this is Y shape. Actually, this is wrong. It should be 1, 2, 3, 4, and 5, not A, B, C, D. Anyway, and then we continue down. It seems that we continue with an impulsive move. It has to be, of course, a 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, right? This is a 3, a standard 3 pattern. So we've had this move to the downside over here to complete wave 1. And then we had a W, X, and Y, again with an ending triangle here, and a nice flat, expanded flat pattern over here, ending this move, okay, this correction. Now this correction is considered to be a little bit longer than usual, which means we're going to get a wave 3, right? Then wave 4 is more likely to be sharp and potentially close above, below that level. And then we're going to see wave 5 to take out this wave C in the minor degree, right? And once we actually close that as well, then we should be looking for prices to start moving higher. Now, with wave 1 being done, 2, this sort of pattern indicates that we're going to see a smaller degree impulse wave down here. That's going to be probably 3, then 4, and then 5, okay, to complete that move to the downside, which I've said before, actually probably looking to go down to around 1447. But before that, pay attention, please, that this is ended wave B at the 78.6. So if we pull a Fibonacci extension tool, right, the 78.6 extension comes to around 1534. So I'm expecting wave 3 to break that level, right? If we get a bounce, okay, when then this is going to be a different case, which we're going to explore again, of course, next week. Now, if we just again pull that Fibonacci extension, because we want to assume, we are assuming that this is the end of wave 2. In this case, we don't want that. We want the 61.8. We want the 1.618. So the 1 is around 1529. So this is at least where wave 3 is going to end. Okay, this is the least minimum, let's say, for wave 3. And then we're going to see 4 and 5. Ideally, wave 3 should be larger than the 100% of wave 1. So we could actually extend below the 1529. Okay, in case, of course, we get different signals, then this view would change. We could see an A, B, and a C for a deeper correction up here, and then prices to start moving lower. With invalidation level, of course, the 1594. The oil, just to go a little bit further out, we talked about this being an impulsive move to the downside, right? And we are now, over the past few months, being in triple zigzag potentially that is going to end wave 2, and then we should be looking for prices to go low. Now, last week we talked about this potentially being an ABC, and then we start down for an impulsive move. In case we remain below the 50-50 or so, then the chances of this being impulsive move to the downside actually would be better than we initially thought. Now, at the same time, I want to also mention that we've had a nice bullish hidden divergence over here, and that makes me think that there is some hope, at least in the medium and short term, right, for further upside. I'm seeing this as a correction, right? So A, B, and C, we've had wave 1, 2. This is a 1, 2, 3, 4, and 5. So that's 3, then 4, and potentially we're going to see 5. You could end in a diagonal pattern, diagonal triangle. It could be 1, 2, 3, 4, and then another move to the downside. As long as we go below this previous low, the 49.20, this is going to end the 5th wave to the downside, and then we should start looking for prices to move up. We get some signal in the short term for the momentum, but this is on the 1 hour. So what I would pay attention to, because this still could be seen as an impulse, right? 1, 2, 3, 4, 5, and then A, B, C. The thing is that because this looks corrective, it makes me think that we are still, this is wave 4, right? And then we're going to see wave 5. I'm expecting prices to move within this range until we break for a fresh low, for a false break, let's say, and then we can start looking potentially for prices to move higher.